Airbnb initial public offering. Today we're talking about the possible, I guess it's coming. We're talking about Airbnb's IPO. How does it compare to some of the other companies in this space that are similar to Airbnb? We're looking at Uber, we're looking at Lyft, but we're talking about fundamentals. We're talking about the idea, the business model here of Airbnb and what we should expect from the IPO here in this video. So stay tuned. What's going on, guys? Patrick here, and today we're talking about the Airbnb IPO initial public offering. Now, if you don't know what an IPO is, it basically is when a private company goes public. So people can then buy shares in the company, and then the stock will be listed on a major exchange like the NASDAQ or the New York Stock Exchange. Let's talk about the fundamentals. Let's talk about the world that we're living in today, and let's just talk about Airbnb in general here. I found a really good article online talking about Airbnb, and we're going to really just kind of go through the article and share some of these ideas. I agree with almost everything in the article, so I'll put a link down below if you really want to read it, but we're going to basically go through the article here in this video. So Airbnb is an online rental marketplace for homes, lodging, rentals, things like that. I'm pretty sure most people watching this video understand that at this point. I'm sure you guys don't need a full breakdown on what Airbnb is. If you're watching this video, it's probably a pretty good chance that you already have an understanding. So in a filing back in August, Airbnb announced that they were looking to go public, to have a initial public offering. So if you look at some of their competitors in the space, obviously you've got Expedia, which is XPE, and you've got Book Holdings, which is BKNG. And obviously it's important to look at how these markets have reacted recently with Expedia, and you've got to look at how the rental housing market is doing in a world today that is much different than a world of 2019 when people were going out and not wearing masks and not being worried about traveling and pandemics and all of that. So it's obviously a very different world that we live in today. Now, unlike Airbnb, the Expedia Group and Book Holdings are reporting solid earnings as their operating profits increase year over year. TripAdvisor, which reported $156 million in revenue in 2019 and an operating profit of $18.7 million, while small, is another competitor against Airbnb. You can see here, this is Expedia, which is really amazing. Back in March, going from $43 up to $128 today. Big major gap up. Look at that action. I mean, come on. Talk about buying the dip, selling the rip. So obviously this chart shows us that the travel booking world has bounced back. I mean, we're basically at a point where we were in 2019 at the $120, $140 range, and Expedia up there at that range now. Let's talk about financials really quickly here on Airbnb. Quarter 2 2020, the revenue was $350 million, 67% compared to quarter 2 of 2019, which recorded a quarterly revenue of over $1 billion. These numbers are less than half of the reported revenue of quarter 1 2020, which $842 million. As a result, the company's valuation has dropped from $31 billion to $18 billion. The big red flag, like with all these tech companies and all these apps and all these companies like this, is that the fact that the company is still not yet profitable. In 2017, 2018, there was a lot of hype around the company as they showed positive numbers for their earnings before interest, tax, depreciation, and amortization. Now, the company has been reporting inconsistent revenue ever since in their sales and marketing. As of September 30th, 2020, the company has $2.6 billion in cash, which is more than the numbers reported for cash and cash equivalents in 2019 and 2018. Nonetheless, this is way below their short-term net liabilities of $4.3 billion, which is considered a warning sign in terms of financial stability. Additionally, they also have $1.8 billion in long-term debt as well. taking all this into consideration, you could say that Airbnb is looking to raise funds by doing this IPO. It has already undergone its Series F investments and is a unicorn company, which is a privately owned company, which is a valuation over $1 billion, which makes it difficult to receive any meaningful investments at this point, further investments, because big hedge funds and investors and venture capitalists, they don't want to invest in a company that's already overvalued at that point. They're trying to get in on the ground floor. So the financials, not looking so great for Airbnb right now. Airbnb is part of the industry, obviously, that took a huge hit during the COVID-19 pandemic. They had a net 4.1 million cancellations in March when fear regarding COVID peaked. Obviously, that was expected. We thought the world was ending. No one was traveling. There was lockdowns and all of that fun stuff. And as a result of that, Airbnb's goal of creating a community of hosts and guests has obviously faced a major obstacle here in 2020. They have a deal now, too, where they have Airbnb experiences where you can book different experiences through their app as well. It's like you go and you book your hotel, you book your experiences. You want to go snorkeling while you're in Miami, you could book it right there on Airbnb. There's other things that they're branching out, but obviously at the end of the day, the big moneymaker for them is going to be the rental properties and people hosting other people through their app, Airbnb. Now, the question remains, after all of this happens and after the pandemic, do we ever solve it? Do we get the vaccine? What happens? Do people go out and start booking on Airbnb again in the future? We haven't really seen that just yet. We did see that the Expedia stock rebounded very strongly from that low there in March. So there is confidence in travel. There is confidence in rentals and bookings and all of that just by seeing, Expedia bouncing back so strongly like that. Now, if we look at this app-based booking tech space world that we're living in, things like Uber and Lyft, if we look at their IPOs obviously failed miserably out of the gates. It wasn't beautiful. And the question, really is, how big is the ride-sharing economy? And obviously Airbnb gets kind of stuck into this Uber Lyft world when you imagine, using Uber to take a car to an Airbnb when you're traveling. It's all kind of just branched together here. So right now behind me, we're looking at the Lyft IPO. So right now behind me, we're looking at the Lyft stock price. Their IPO back there in April of 2019, they IPO'd at a astronomical price. And this is one thing that I hate about IPOs. I don't understand why the street does this. Well, I guess I do understand it. It's the way that the banks can make tons and tons of money by basically, just setting the price of the IPO at an astronomical price that really makes no sense other than hype and FOMO. And you can see the price of Lyft never getting back up to its original IPO price when it IPO'd there at the $80 area. It had a low there in March of $14. It has recovered some. It's back up to the $40 area, but still it's down 50% since its IPO. And like I said, a lot of that really comes from the street, from the banks pricing these IPOs very high because there's a lot of hype. Also, some other tech IPOs that were failures or really never even happened. You look at something like WeWork, which was once valued at $47 billion, failed to do an IPO because of its massive debt. And now it's only valued at $2.9 billion. So to go from $47 billion to $2.9 billion, that's a pretty big drop there. Sometimes these tech companies get a lot of hype behind them. People get excited. The street prices them really high. Everyone talks about them. They're all over CNBC. And we know exactly what's going to happen again with Airbnb. Guess what? It's going to get hyped. And, well, the IPO price is going to go to the moon, and it's probably going to end up cratering back down when the actual reality comes into play here. So really, at the end of the day, we've got to think about Airbnb in the world that we're living in today. It's going to be a very hyped up IPO because a lot of people are going to just want to own stock in Airbnb, even if it doesn't really make sense to own the price of the stock at a certain level right at the IPO. Personally, for me, if I'm going to be looking to invest in an IPO, I'm always kind of looking to see if I'm I don't want to be the first guy to the party, and I don't want to be the last. So if there's momentum, that the stock just is doing, crazy things, If we get a nice little pullback, we'll look for overall setups and things like that. But I'm not going to be trying to jump into the first day here on Airbnb. Maybe it goes to the moon. Maybe it doesn't. I'm thinking that there's going to be a lot of headwinds for Airbnb in the future, especially now with the whole pandemic and everything that's going on in the world. I don't think it's going to go away. It's just not going to magically just go away here unless they come out with some kind of magical go away device. But we've really got to ask ourselves, the Airbnb IPO is overpriced, that there probably will be a big pullback at some point, like we saw with Uber and like we saw with Lyft as well in this space. So Airbnb, a lot of headwinds, not a good time to go public for them right now. They would have done a lot better going public in 2019, but you've got to ask yourself, at some point, I guess you got to pull the trigger, right? At some point, you got to do it. At some point, you got to go public, and well, that's what they're looking to do. That's the breakdown. Airbnb